Good afternoon and welcome to the Coinbase Institutional Markets Call. My name is Ben Floyd. I'm Head of Execution Services and I will be your host for today. Thank you very much, David, for filling in last week. He's with us again, as is George Toropov and Sarah Williamson, who are going to be running through all of the most important things that have been happening in crypto this week. There's been a ton of short-term concerns, some overhangs, so we're going to run through those. We're going to go through some of the longer-term catalysts just to balance things up a little bit. We're also going to provide some updates on not only the BTC ETF, but also what our expectations are for the ETH ETF. And then we're going to run through token unlocks and David's monthly report. For those watching on YouTube, please don't forget to scan the QR code for all of the team's great research. For those listening on podcasts, that's all available on your show notes. And no matter where you're listening, please don't forget to subscribe so that you get an alert for any new episodes that come out. Now, David, thank you so much, as I said, for covering last week. While I was out, I managed to get a new microphone. I'm an absolute amateur. You've been a pro for a long, long time. So does this now make me sound smarter? Like, what do I need to do to make this work out?
No, I mean, it sounds great. I think it sounds, not that you didn't sound beautiful before, Ben, but I think it's definitely a step up.
Amazing. You're ever the charmer. I appreciate that. Perfect. Well, let's get into it. So, George, we've just come off a holiday week and we've had a break with the 4th of July in the US, but there's still a ton of stuff going on. So maybe can you just talk us through what you've been hearing in some of your calls with clients and what they're focusing on at the moment?
Yeah, for sure. I think it's always quite funny how you oftentimes get pretty big moves during like holiday seasons, right? Like so again, one of those episodes. But yeah, markets have definitely been quite choppy. BTC traded down to 53K end of last week. ETH down to 2,800. Many altcoins were down double-digit percentages as well. Obviously, since then we were seeing a bit of a bounce. So BTC traded up to 58K again today. So quite volatile. I think in terms of what people were talking about, mostly the trigger end of last week for the downwards move that really accelerated it was a supposedly imminent Mt. Gox distribution. And then we obviously also had US and German government wallet movements, as reported by several news outlets referring to on-chain data. But in addition to that, I think it's also the contributing factor is also that the sentiment is just in general not great. It's been which is a function of price action, right? As particularly on altcoins, which hasn't been really amazing for at least like 3-4 months now. And obviously the summer period itself being a little bit more quiet, more illiquid, also hasn't been helping the price action, I would say.
Nice. So can we just dig into the details here a little bit around, I guess, particularly maybe some of the Mt. Gox stuff? Like, when are people actually going to receive their Bitcoin? Like, is it all at once? And at which point, like, it feels fair that the market is going to sell off aggressively, or is it kind of over a period of time?
Yeah. So I mean, first of all, the trustee is was holding around 142,000 Bitcoin. The trigger itself was about 2,700 BTC that was transferred late last week. So the way it works is that there are 5 partners that will help distribute the coins to their rightful owners. So it's Kraken, Bitstamp, SBI, VC Trade, Bitbank, and BitGo. Now, what people and you can see it actually quite nicely in the price section as well. So first, obviously, you have that on-chain movement, 2,700 BTC. Everyone panics, and BTC and sells off and takes the whole market with it. But then you suddenly had more people starting to circulate threads that actually, in the case of Kraken, for instance, they're saying that it can take up to 90 days for the creditors to ultimately receive their coins. In the case of SBI VC Trade, it's about 2 weeks. So again, there's some range. But the important thing to note here is that it's not all happening in one day.
Perfect. And then talking about the kind of the German government selling as well, I know you've got a great chart, so let's bring that one up. But what are we kind of seeing there in terms of movements and market reactions as well? And obviously this is all on chain and all very publicly available, and we'll link to that in the show notes.
Yeah, so the wallet had about $2.2 billion worth in BTC. Started moving more assets again. Maybe they've sold some of that. Maybe the they're going to take it slower, but they've moved it to other wallets. We don't know that. But they've moved about 70,000 BTC over the last 48 hours or so. And actually, I mean, if you look at the price action today, right, I think there's a bit of a relief in the market as well, because maybe it's seen as there being some light in the end of the tunnel in terms of that government selling. But yeah, as you can see, we had a chart from Dune here. They haven't really moved or sold anything or moved any BTC until mid-June, and then gradually started to sell, and then it's really accelerated, or they've moved more out of the wallet over the last couple of days.
Correct. Interesting. Now, if we think about that in the context of volume, it's obviously a large amount, but Bitcoin also trades a huge amount on a kind of a day-to-day basis. How should we think about that? Because if the number is not huge relative to the daily volume, but perhaps the impact is just being a lot more heavily felt when volumes are slightly lighter, when the news cycle is slightly lighter, when there's not any near-term positive catalysts. Is that a fair way of looking at it, or really is it meaningful from a volume perspective as well?
Yeah, no, look, I agree 100% with you. I mean, obviously, as you say, it's not a small number. I mean, these are pretty sizable numbers. But then again, I think the way the market reacts is more a function of the general market environment rather than, the flows in and of itself. Again, like I think these are pretty sizable positions, but the people that execute that obviously not just going to market sell over, right? Like they're trying to do that gradually and not affect the price too much. So you have to factor that into account as well. So yeah, I think in general the price action, right, the way the reactions we have been seeing, just shows that we've broken down below a couple of like moving averages, right? And BTC, we are below the 200-day EMA right now, for instance, right? There's a couple of other technical levels, and then below those levels, I mean, typically you always have nervousness increase a little bit in the short term, at least.
Super. Now, Sarah, would love to bring you in. Sarah's head of prime financing trading. Welcome back to the pod. Good to see you.
Thank you.
So Sarah, you are obviously super busy in those periods when we do see sharp moves up higher and also sharp moves lower as well. Can you kind of just talk us through what you're seeing on your side of the firm?
Yeah, definitely. I think, as George mentioned, that overhang that we're seeing in the market right now has resulted in some pretty significant deleveraging across all financing products. So not just CeFi here at Coinbase, but also in the perps market, as well as the DeFi markets. So last Friday, sort of right after the holiday, was sort of the largest move that we saw during the past week. In the perps market, those were some decent sized liquidations. So over 500 million was liquidated over that 24-hour period. And while the current perp funding rates are positive, during that time last week, there was some brief periods where the altcoins, which George had mentioned, were hit a little bit harder. Some altcoins that the funding rates are actually negative for during some small periods. So I think that was an interesting move. And then on the DeFi side, lending TVL has also fallen. It's down 15% over the last month. And the USDC borrow rates in DeFi have also come down. I think they were around 10% as recent as May. They're down to around 8% in DeFi now, which is an indication that they're sort of deleveraging across the board as cash has gotten a little cheaper, as there's not as much demand. At Coinbase, we're seeing the same thing. We saw deleveraging. It was led by market makers and followed by other types of client strategies, returning USD and USDC borrows. Our loan book is down more than 10% since the beginning of the month as it relates to margin loans. And those liquidations in the perps market, while they have stabilized now, I think clients still are positioned pretty conservatively as they wait for more catalysts in the market or sort of that overhang that George mentioned to move on. I would also just point out, I think there was a decent number of margin calls on the way down. Last week, I think everything was handled in a really orderly fashion, which was great to see. And here, the portfolio margin product, I think, continues to be favored by our client base. It actually protects them from auto liquidations during those large swings. And our USDC borrow rates have been stable around 9%, and Bitcoin and Ether are still in the same range that they've been trading on in the past couple of months. So I think there's more to come on if we see some levering back up as we move into potential ETH ETF, other catalysts that I think David and Ben are going to speak about later. But right now, that deleveraging has resulted in some pretty quiet activity in the financing markets.
Awesome. Thanks, Sarah. Just for those that aren't aware, can you just run through portfolio margin in a little more detail? Like, why does that protect you from liquidations at the weekend, for example?
Yeah. So our portfolio margin product at Coinbase, which is the first of its kind in the crypto space, it's meant for institutional clients to actually be able to run leverage and short in one entity on our Prime platform. So they'll have access to the execution services provided by Ben's team, as well as our Prime execution platform through our smart order router, custody, and then also the full suite of financing products. So being able to do that in one place with a risk model overlaid on top of that, everything seamless through our UIs or our APIs, allow clients to really get sort of what they would be used to in the equity prime brokerage world. So specifically, I think one of the features versus what you would see in the perps or DeFi markets is that we are able to offer the ability for clients to get margin called and have time to meet that margin call. So we're not automatically closing people out of their short positions and liquidating those. They'll actually receive a margin call and have some time to meet that call instead of getting closed out in the middle of the night.
Amazing. Feels like much more of a partnership than just getting closed out. Awesome. Thanks so much, Sarah. So I guess on the positive side of things, because we've been talking on the kind of the short-term bearish catalysts, some of the BTC inflows have certainly improved. So David, we'd love to bring you in here. We've seen almost $450 million of BTC inflows over the last just 2 sessions. So Monday and then the previous Friday. I guess I'm curious, like, how are you thinking about that behavior, given where we're trading and also some of the short-term catalysts that we've mentioned previously?
Yeah, it's always good to see inflows, and I think it's still a positive sign overall. But the challenge is that since April, what we've seen as far as the inflows are concerned from the ETF side is that a lot of that has been offset by CME positions, CME short positions, I should say. So a lot of the basis trades have actually kind of created more of a neutral price effect, which has, unfortunately given people the wrong impression about the flows. Like, people believe that there needs to be a 1-for-1 price action whenever you see these flows into the ETFs, and it's not happening for that reason.
Interesting. So we've got obviously there's a lot less length in basis now than there was. So some of those people that are putting it on when there was good basis are obviously taking some of that off now. What about ETH? Obviously, we're expecting that pretty soon. How are expectations shaping up for what that launch looks like vis-a-vis BTC?
Yeah, the date is still uncertain. We know that the SEC asked for the S1s as of yesterday, July 8th. So we think that probably within the next 2 weeks, we could still see ETH ETFs launch because, of course, they need both the 19B4 filings as well as the S1s in order to do so. As far as the flows are concerned, I think the expectations from our clients have come down. For the most part, now they're down to around 15 to 20% of the Bitcoin flows that we've gotten thus far, which will put it at around $1 billion on a low estimate to around $3 billion on a high estimate. And, the expectations, I think, have been muted due to the fact that this is dragged on for quite a bit. Now you're also seeing that some issuers are starting to put out applications for SOL ETFs as well, which would also increase the competition between ETH and SOL. So I think that there are several things that seem to be denting the sentiment here.
Cool. Thanks for that rundown, David. Sarah, would love to bring you in here. What are you seeing on the ETH side with regards to demand and rates and things like that?
Yeah, so I think, back to what you and David were talking about on the basis side, I think basis from our clients' perspective has been very quiet over the past couple of months, both on Bitcoin and on ETH. I think ETH has been particularly quiet with the basis spread remaining really low since early June. And feedback from our clients is actually that the spread is not really attractive at this point, especially considering funding rates that they're seeing. So funding costs on the dollar side to fund the trade, and then anything that they'd earn. I think what we saw on the Bitcoin ETF side is that rates were very high in the very beginning in the traditional finance markets for lending. That was because there wasn't a ton of liquidity, but I don't think there was also like the corresponding demand at the beginning as well. And most of those positions seem to be held by more market makers, especially in the days directly following launch. Would expect sort of the same thing to begin now. Market makers and sort of retail lenders would be the main holders to start with. That would find its way to the market. It's probably expensive, but would expect that rates would back off pretty quickly as liquidity grows and you see sort of a broader set of clients who are holding that and actually looking to lend their positions. But it is possible that if clients are putting on basis, they're using the ETF to put on the basis trade. But I think because the spread has been so compressed recently, that has been a relatively quiet trade anyway.
Thanks, Sarah. Yeah, interesting to see if that changes as we do see the ETF launch. These things are always pretty quick to adapt, as we all know. Now, George, moving to some potentially kind of more positive catalysts about money that might come into the space. FTX claims are trading up and continue to trade higher. Can you give us a quick rundown of where they're trading and what that might mean to the space in general?
Yeah, for sure. So if you look at some of the claims, they've been getting sold in the 115 to 120 cents on the dollar region. And these are obviously larger trades in the 8-figure range, so held by crypto firms. So that capital, at least partially, should be, I think, returning back into the space. There's also a lot of retail holders, I think, still out there holding out, waiting for the distribution. In terms of the key dates to watch out for, first of all, we've got August 16th, by which the vote on the proposed distribution plan should be complete. After that, the courts have to approve it until October 7th. And then the expectation generally is that the overall distribution should follow at some point, either late in Q4 or Q1 next year. Again, it's going to be a question of everything is going to come at once, or if folks are going to get, let's say, 100, 110% first, and then it's going to, for the remainder, it's going to take a little bit longer. So we'll have to see about that. But that, I think, will be quite a nice catalyst as we go into year end. And overall, the expectation right now is for those holders to receive between 120 to 140%, roughly, of the claim value as of the bankruptcy date in November 2022.
Is it bad for me to want the FTX cash to come all at once and all the other overhangs to be dripped like day by day over 90 days?
No, I can fully understand you here.
Nice. Well, good to have some long-term catalysts that are slightly more positive. David, moving along to you on the macro side of things. Obviously, we had non-farms last week. We have inflation this week. What are we looking out for, and where are the catalysts to keep an eye on?
Yeah, I think you brought up two of the most important catalysts that we're probably going to see on the macro side. The US CPI is coming out on Thursday, and that's going to be for the month of June. The median forecast for that is around 0.1% month to month. But of course, more people are paying to the year-on-year figure, which is expected at 3.1%, the median forecast, which would be coming down from the 3.3% of the previous month. But I think non-farm payrolls was pretty important, and we might have missed it because it was sandwiched after the July 4th holidays in the U.S. and, of course, before the weekend. But it ticked higher. It was above expectations in June to around 206,000, which is above the forecast of 190,000. But unemployment actually ticked higher. So the unemployment rate is currently standing around 4.1%. So inflation continues its disinflationary trend. We think that the setup could be very positive for the Fed to actually cut rates by September, which is what the market seems to be pricing in at the moment. If you look at the Fed Funds futures, for example, they're pricing in around a 75% chance that the first cut is going to start in September. And they're currently pricing in 2 cuts, which was our base case, which we reported like a month ago. I think watching for this week, it's important to see what Powell says at the Senate Banking Committee. He's actually speaking there as we record this. He's also going to speak again at the House Financial Services Committee tomorrow. But we've got a bunch of Fed speakers this week. Bowman's going to speak at 1:30, who's a perennial hawk. We've also got Goolsbee, Cook, Bostic also speaking this week. So I think all of this is going to be important to watch as we get to the run-up for the FOMC meeting, which happens at the end of July.
Wow, there's a ton on there to keep an eye on. So looking forward to you updating us next week. Also, something we've spoken about in the past, which has gone a little quieter, but something was released yesterday on the political side of things and kind of how that might help crypto. Can you just run us through that?
Yeah, I think the politics and sentiment is the hardest thing to kind of read in this space. And we've been seeing these shifts in the U.S. regulatory environment. We saw, for example, the U.S. House of Representatives' decision to approve FIT 21 in the first half of the year. Then we saw the Supreme Court decision to actually overturn Chevron deference, which I think was overlooked by a lot of people. But of course, I think the U.S. elections are likely to be the most important driver in the second half of this year, leading up to, of course, the actual date in November. But we saw that the Republicans under Trump actually included crypto as part of the party platform that they published. And so they put out a lot of talking points that Trump has had on the subject as far as trying to champion innovation, for example, making sure that people who are engaged in the space aren't unlawfully cracked down upon, for example, defending the rights of people to actually self-custody. So I think that this is starting to really put crypto in the forefront of the elections.
Amazing. And prior, I think, to the political climate, I guess, changing a little bit and Trump being so pro-crypto, the Chevron deference was super important to the space in that it was going to, it once repealed and it has been repealed, it was going to remove some of the power in rulemaking from the SEC to the courts. Now, can you just give us a quick update? That's obviously been announced. The market didn't really move. Like, how important is that to us now?
I think it was massively important. It's just that I think it's hard for markets to kind of interpret these things. And I think that's the tough part with regulatory environments, especially when it comes to court cases. Oftentimes, they're not quite as black and white as some of the cases we've seen previously with regards to grayscale, for example. So I think this doctrine is hugely significant because what it does is it grants deference to an administrative agency's interpretation of federal laws, particularly when those laws are ambiguous as written. So the idea of the SEC, for example, interpreting the laws and actually having their powers revoked for some in terms of how they want to regulate that, I think could be hugely important because I think we've seen, of course, the overreach that the SEC authorities have tried to kind of put as far as managing not just crypto, but many sectors. So this is, of course, going to affect their decision-making processes going forward. It's just not very clear right now who's going to take up the mantle, how is this going to change things. And I think from the crypto market's perspective, they kind of want to see the paint on the wall before they're able to kind of move.
Yeah, that feels fair. I guess it's very much a long-term building block as opposed to a short-term market driver. So that does make a ton of sense. I guess also continuing to stay long-term, George, token unlocks, altcoin inflation is something I know you've been speaking about a lot with clients. Can you kind of run us through like the 101 here and why it's important?
Yeah, for sure. Thanks, Ben. So I think token unlocks have definitely been a really central topic, I think, in client conversations the last few months. And obviously for good reason, because if you compare, this cycle with the last cycles, the last couple of cycles, you probably, if you built a basket and sort of applied a spray and pray kind of strategy, right, you probably would have done relatively well if you managed to sell in part of the back end of the cycle, right? Whereas this time around, it feels like, again, BTC, and we talked about this on this call in the past, BTC and ETH are doing relatively well, but you have altcoins that are down These are blue chip altcoins that are down 70, 80% from their peaks in February or March. And I think one of the main reasons is obviously the inflationary dynamics, the tokenomics. So if you look at this chart for our listeners, essentially we are looking at the cumulative altcoin unlocks that we have seen, that you can see in red on this chart over the last 12 months. And in this data set, we focused on around 160 of the top coins. So in blue, you have the daily unlocks as well. But the main one is, I think, the main chart is in, or line rather, is in red. So that's about $25 billion worth of unlocks over the last 12 months. So obviously that does not include a lot of other things like NFTs, runes, ordinals. There's thousands of other coins. There's meme coins that are not in here. So there's a lot of other liquidity, let's say, that's inflationary that has not been included. So it's definitely an underestimation. And if you add the BTC that was mined as well on top of that, then we're arriving at about $38 billion of the last 12 months. So I think that's probably a very important part to our answer in terms of what's been happening in the market in BTC versus altcoins.
Interesting. And George and David, I'd love to bring you in too. George, maybe you start. So when you're talking to clients about this, does that kind of solidify or reinforce the hypothesis around kind of like a BTC super cycle and it continuing to trend higher? And maybe ETH comes along a little bit with that, as we are just seeing so much pressure on the altcoins.
I mean, I would say for sure. I think it's come up in a lot of conversations, people talking about a BTC super cycle, because obviously now you have ETFs, right? So you do have an institutional bid behind BTC, whereas in altcoins, I think it's clear that in the long run, the current dynamic is not really sustainable, right? You have too many new coins, too many unlocks, too much inflation. So yeah, it'll be quite interesting to see how that will work out in the longer term.
Yeah, I agree with George. I think it's tough because this doesn't look like other cycles where Bitcoin has typically rallied due to retail pressure, and then that's like flowed over to ETH, and then that's flowed over to the altcoin space. And in part, that's because the money is now trapped in the ETF issuers, and the ETF issuers themselves hold around 800 to 850,000 Bitcoin, and that's meaningful. But that's not Bitcoin. That's not capital that's moving into other spaces. They're kind of keeping it in one place. And I think that's why we haven't necessarily seen that progression we typically see in other cycles. Now, I think that may change with the potential for ETH ETF flows, for example, because what I think a lot of people do not recognize is that with ETH, the value of ETH going up actually increases the value of the collateral in the DeFi space. And doing so, because so much of the collateral in DeFi is backed by ETH, the value of that going up means that people can actually put money back into the system in ETH terms. And I think that could actually potentially have an impact on the rest of the ecosystem and the cycle itself. But until we get that, I think we're still kind of stuck with just this being a Bitcoin rally.
So just to add another angle as well, if you move to the next slide, that actually looks at monthly VC raises over the last couple of years. So you can see here as well quite nicely that the peak in the market was probably sort of the back end of 2021, then Q1, perhaps Q2 of 2022. But if you look at VC raises recently, obviously there was a bit of a spike in line with the market in March and in April this year. But then at the same time, obviously, because you have all of these inflationary token unlocks, which create these negative price dynamics, which then in turn reduce the profits of VCs, that makes it more difficult to raise more funds to fund projects. So yeah, it'll be interesting to see again, like how this works out. Obviously, towards the year end, as David mentioned, we are going to have some positive macro catalysts, possibly other crypto intrinsic catalysts like FTX distributions. So hopefully that will put us in a better environment, and hopefully the tokenomics of new launches will be more done with the long-term picture in mind?
Yeah, I mean, so much of the space is dependent on liquidity. And of course, Bitcoin going up helps everyone. So it's not as if it didn't have any impact whatsoever. I'm just saying that it was a little bit more on the marginal side. Like I think it was muted because the actual capital that you need isn't, as you say, being recycled in a way that where people can actually apply it to new projects and kind of team building out. So I think that's something that is still necessary before like we can actually see the next leg of the rally and the rest of the crypto space.
So David, switching gears a little bit, would love to run through your monthly report. You guys get these out obviously every single month, and they're incredible, just a treasure trove of insights. Can you just run us through what this month's covers?
Yeah. So the idea of this month is we wanted to understand whether crypto market performance in the first half of this year has been driven more by macro factors or fundamentals, which of course then could inform us about how the second half of this year could actually be driven and which factors actually do it. We did that by actually looking at two machine learning algorithms, linear regression models, which hopefully most people are familiar with, and random forest models. So the idea is that linear regression models are fairly straightforward in terms of being able to interpret how factors directly impact cryptocurrency price, for example. But I like random forest models because they kind of capture the intricate non-linear relationships and the interactions that you have between those factors themselves. So the ultimate goal of this is to determine whether those factors, once you kind of whittle them down, actually still impact the price and the performance of it, and how are they doing so. So overall, our model results, and you can kind of see the chart that we have online, but you can also go to a report to kind of take a look. They basically suggest that the macro environment, of course, is still relevant for crypto performance, but fundamentals like network activity, like which of course informs user adoption, like total value locked. These things are, of course, dominant forces for the market, and we expect them to be dominant probably in the second half of this year as well. And that's been consistent with our view that overall the recent price action, of course, had a lot to do with technical factors like the supply overhangs, but also there was just a lack of directional macro momentum. I think that given the absence of internal crypto narratives that we're probably going to see in the short term, I think it's very likely that the price action is going to remain pretty choppy through the third quarter of 2024. But we think that Fed rate cuts starting in September are probably going to support more interest in long duration assets in fourth quarter of this year, particularly as they introduce more and invite more liquidity into the space.
Perfect. Thanks so much, David. A quick reminder to everyone that is available on our website free of charge. So definitely check that out. A ton of other great content on there as well for you to review. But that is a wrap for this week. We're going to have DH back next week. He's currently at ETHCC, so giving us a rundown on all the latest and greatest things going on there. So look forward to that. And of course, a special thanks to everyone listening and watching in, and also David, Sarah, George, and Richie, and the rest of the great team that help us put this together. But until then, I hope if you're in the Northern Hemisphere, enjoy the sun, enjoy the summer, and we'll catch you next week. Take care.